Imagine this. You wake up in the morning and your money is already working harder than most people will work in an entire year. No boss, no paycheck, no ceiling, just a structure, a machine, quietly compounding your wealth across real estate, private equity, and generational assets. That is what a family office does. And today, we are breaking down exactly how it works from the $5 million entry point all the way up to a $500 million empire. This is Ron Invest. And if you are serious about building real, lasting wealth, you are in the right place. Hit that like button right now and make sure you subscribe so you never miss a video like this. Let us get into it. What is a family office? Let us start with the foundation. A family office is a private wealth management structure built specifically for high net worth individuals and families. It is not a bank. It is not a brokerage account. It is an entire organization, sometimes with a full team of professionals designed to manage, protect, and grow a family's wealth across multiple generations. There are two main types: the single-family office, which serves just one family, and the multi-family office, which pools resources and services across several wealthy families. For the $5 million to $500 million range we are covering today, both models are relevant, depending on where you are in your journey. Now, here is the critical thing most people miss. A family office is not just about investing money. It is about building a system: tax strategy, estate planning, legal protection, philanthropic giving, business ownership, and investment management, all operating under one unified structure. That is the real power, the $5 million to $20 million range, building the foundation. At the $5 to $20 million level, you are in what most professionals call the emerging family office stage. You have enough capital to start thinking like an institution, but you are not yet operating at the scale where a fully staffed single-family office makes financial sense. At this level, most families work with a multi-family office or a small advisory team. Your primary goals here are asset protection and diversification. You are moving wealth out of pure liquid markets and into a mix of private investments, real estate, and tax-advantaged structures. The holding company becomes your best friend at this stage. By placing your assets inside a properly structured holding company, often an LLC or a corporation depending on your jurisdiction, you create a legal wall between your personal life and your investment activities. This protects you from liability and opens up significant tax efficiency opportunities. Think about it this way. When you own investments personally, every dollar of income hits your personal tax return at the highest possible rate. But inside a holding company, you control when and how that income is recognized. You can retain earnings, reinvest them, and defer taxes in ways that are simply not available to individual investors. At the $5 to $20 million level, you are typically building your core investment portfolio across three buckets: liquid assets, stocks, bonds, and cash equivalents, kept at around 20 to 30% of your total portfolio for flexibility. Real estate, both residential and commercial, making up another 30 to 40%, generating cash flow and long-term appreciation. And alternative investments, private equity, private credit, venture deals, filling out the remaining 30% as you build relationships and access to better deal flow. The $20 million to $100 million range, institutionalizing your wealth. Once you cross the $20 million threshold, everything changes. You are no longer just an investor. You are running what is essentially a small financial institution, and the decisions you make at this level will determine whether your wealth compounds for generations or slowly erodes. This is the stage where most serious families begin establishing a formal single-family office structure. You are hiring specialists, a chief investment officer, a tax attorney, an estate planner, and often a team of analysts who source and evaluate deals on your behalf. Why does this matter so much? Because at this level, the cost of bad decisions is enormous. A single poorly structured tax event can cost you millions. A single estate planning mistake can expose your assets to unnecessary risk. You need professionals who are exclusively focused on your family's financial picture, not on managing a book of hundreds of clients the way a traditional financial advisor would. Investment strategy at this stage becomes far more sophisticated. You are now accessing private credit markets, where you can earn returns that are simply not available in public markets. You are co-investing alongside private equity firms, getting access to deals that were previously reserved for institutional players like pension funds and endowments. Real estate at this level also scales dramatically. You are not just buying rental properties anymore. You are participating in large commercial deals, industrial portfolios, and development projects. Many families at this stage form their own real estate investment entities under the holding company umbrella, allowing them to raise capital from outside investors while maintaining control. One of the most powerful tools at the $20 to $100 million level is the use of a family limited partnership or a family LLC. These structures allow you to transfer wealth to the next generation at a significant discount, often 30 to 40% below fair market value, because of what the IRS recognizes as lack of marketability and lack of control discounts. This is completely legal, and it is one of the most effective estate planning strategies available to high net worth families. Philanthropic giving also becomes a serious strategy at this level. A donor-advised fund or a private foundation allows you to take an immediate tax deduction today while distributing charitable gifts over many years. This gives you enormous flexibility to manage your taxable income in any given year while building a legacy of giving that reflects your family's values, the $100 million to $500 million range, the empire level. Now we are talking about the top of the mountain. At $100 million to $500 million, you are operating a full institutional-grade family office. You have an investment team, you have a legal team, you have an operations team, and your holding company structure has evolved into a multi-layered enterprise that would rival a small bank in its complexity and sophistication. At this level, your investment universe is essentially unlimited. You are writing checks into venture capital funds. You are partnering with private equity firms on leveraged buyouts. You are acquiring entire operating businesses, companies that generate cash flow and serve as engines of compounding inside your holding structure. This is also where direct deal flow becomes one of your greatest competitive advantages. At the $100 million plus level, you are not waiting for an investment bank to bring you a deal. Entrepreneurs seek you out. You are on the cap tables of companies that will never see a public offering. You are earning returns that retail investors simply cannot access. The tax strategy at this level becomes extraordinarily sophisticated. You are using a combination of qualified opportunity zone investments, charitable remainder trusts, intentionally defective grantor trusts, and generation-skipping trust structures, all working together to compound your wealth while legally minimizing the tax drag at every level. One of the most interesting developments at this range is what is called an operating holding company model. Rather than purely investing capital into other businesses, the family office itself becomes an operator. It acquires businesses, installs professional management teams, optimizes operations, and holds them for long-term cash flow, sometimes indefinitely. This is the Berkshire Hathaway model applied at the family level. Insurance is another massive lever at this level. Specifically, the use of private placement life insurance, or PPLI, allows ultra-high net worth families to invest in a tax-free wrapper that grows completely outside of the estate tax system. Done correctly, PPLI can shelter tens of millions of dollars of investment returns from both income tax and estate tax simultaneously. Governance is also critical at this level. You are not just managing money, you are managing family dynamics across generations. A proper family office at the $500 million level will have a formal family constitution, a document that outlines the family's values, investment philosophy, governance structure, and succession plan. It defines who can access capital, under what conditions, and how decisions are made when family members disagree. This is what separates multi-generational dynasties from families that lose their wealth by the third generation. The statistics on this are sobering. 70% of family wealth is lost by the second generation. 90% is gone by the third. The reason is almost never bad investments. The reason is poor governance, lack of education, and the absence of a formal structure that creates accountability and alignment across the family. The families that preserve and compound their wealth across generations are the ones who treat the family office like a business, with clear roles, clear objectives, and a relentless focus on the process, not just the results. Here is the bottom line. Whether you are at $5 million or $500 million, the principles are the same. Structure your wealth, protect your assets, build a team, invest with intention, and always think in generations, not quarters. The family office is not just a tool for the ultra-rich. It is a mindset. It is a commitment to taking your financial future seriously enough to build a real system around it. And the earlier you start thinking this way, the more compounding time you give yourself and your family. If this video gave you value, do me a favor. Hit that like button, leave a comment below telling me which level you are currently working toward, and subscribe if you have not already. I drop videos like this every week, and you do not want to miss what is coming next. This is Ron Invest. I will see you in the next one.